good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Cheryl D'Souza. And for now, the market is continuing its good trend. So it's very close to that 22,500 mark, but it's not coming in a hurry. We have been just around that 20 point sharp, 22,500 for over 2 hours now. So that level is clearly teasing the bulls for now and not coming back in a hurry, at least 22,500. But for what it's worth, the good news is that India VIX has cooled off a bit. So we are finally below the 20 mark. All through last week, India VIX continued to be elevated, was above the mark of 20 for most times. Today, there's a bit of a semblance there and it's down almost 2%, just around that 20 mark. Autos, they are leading the pack today in the front gear with the good numbers coming in from M&M as well as the commentary being strong, getting the thumbs up from brokerages, and all of that is auguring well for that stock, very close to the record high level. IT, however, is souring the mood a bit. Remember, for LTI Mindtree, the latest news flow has been the fact that there is a possibility that stock might be kicked out of the Nifty50 when it comes to the September rejig, and that is something that is pressurizing that stock, plus a lot many other factors which are actually at play when it comes to the IT sector. But I think, Cheryl, largely there are result reactions which are the ones which are fairly active, whether it's Keynes Technology, Crompton Greaves, other names as well, and that is what continues to gain traction.
Absolutely. A lot of these counters where you've seen earnings actually pour in, those are the ones that are seeing good uptick in trade today, be it Endurance Tech, be it Keynes Technologies is locked in the upper circuit about 20% or so. We spoke to the management. They were pretty confident of the year going ahead as well. They have a very strong order book pipeline as well for the next 3 years. So that's Keynes Technologies. There you go. Locked in the upper circuit of about 20%. Let's put the spotlight on some of the counters that have actually come out with their earnings a short while ago. Let's take a look at GSK Pharma, because the consolidated profits have come in much higher when you compare it on a year-on-year basis. Even their revenues also have seen a sharp uptick, 11% up move on that particular counter on back of its earnings. Apart from that, you have also LT Foods that came out with their earnings a short while ago. If you look at the profit, it's a year-on-year basis, definitely a good uptick. But the stock is not doing that much in trade today. It's pretty subdued as we speak. But yes, Anisha, as we speak right now, if you look at Nifty, it is trying to make that sort of a rally or move towards 22,500.
Attempt is being made at 22,500. Whether we hit that mark and whether we stay above that and close above that will be the big question. But yes, as we pointed out, we've been speaking with a whole host of newsmakers on the channel, right from Keynes Technology, Crompton Consumer to InfoEdge. Listen into a slice of those conversations.
We think that during this year, we will probably increase the margins by more than about 100 basis points. And even in the face of a strong growth in revenues too, close to about more than 60% revenue is what we think 60% growth in revenue is what is likely to happen this year. So the order book, if you see, has zoomed to about 4,100 plus crores. And this also does not contain many of the orders that we just received probably in the month of April and May. So all in all, I think the business traction is likely to be pretty high in the coming years.
We have been performing strongly during the course of this year in agriculture pumps. We have seen strong double-digit growth in our agriculture pumps business. Of late, the government's initiative led by the PM Kusum scheme has also given us an opportunity to play in the solar pump segment. Cumulatively, we have today garnered more than 125 crores of orders, of which partially about 35 crores have been executed so far. And we expect some more orders to come in as we look at the pump segment.
The IT hiring, we don't know what the future holds. Of course, the trend is, we are seeing job listings on our site improve. We are seeing more demand for IT professionals on our platform. But we don't know what the next 3 quarters will look like. One can only hope that, we've hit the bottom and from here on things will get better. But time will tell. There's an election in the US. IT hiring is more indexed to what happens in the US economy and what happens to the global economy than to what happens in the Indian economy. And let's see how that plays out over the next few quarters.
Welcome back. Flashes from Vodafone Idea call running for you at the bottom of the screen. If there's anything pertaining to the tariff hike or the utilization of the equity raise, we'll flag it out for you. But continue keeping an eye on that because they are talking to a consortium of banks with respect to management of debt as well. But in the meantime, Sansera Engineering had come out with a good set of numbers. Let's speak with Mr. B.R. Preetham, the ET and Group CEO, to talk to us about the way forward. Mr. Preetham, hi, good to be speaking with you. Let me begin by asking you the outlook for FY25, because in the year gone by, you managed to report a 20% growth on the top line, with the profitability being close to 190 crore. As we look into FY25, what kind of growth, margin and profitability targets you have set for yourself?
Hi, and thank you for having me on your show. We've had, as you said, that we have had a good year, very consistent across all the quarters. And if you really look at our order book is also very, very strong. And we also expect, two-wheeler industry this year to do much better. So, considering all these factors, we are poised to again grow by a very similar percentage. And we've always maintained that we would grow much higher than the industry, and we will continue to do so.
Mr. Preetham, just also joining in the conversation, and you did say that you have a robust or a healthy order book also, and also your order book for the new business is around 1,590 crore rupees thereabout. So if you could tell us, how much of an increase are you going to expect for FY25 when it comes to your order book? And also if you can share some timeline on the execution of the orders?
Yeah, this order book, generally what we have been practicing is that every beginning of every financial year, we reset the order book. At the end of March 2024, our order book was around 2,200 crores, and about 600 crores of that has been moved into the production. Whatever components have started mass production, so we have moved it. So we reset it on the beginning of the business year, and now it stands at 1,600 crores approximately. And this means that this has a potential of an annual peak revenue of 1,600 crores. And generally in our kind of business, a full maturity happens of this order book in 3 years. So we could expect on the third year a full maturity of this business, which would get added to the current run rate.
So the order book is 1,600 and is expected to be executed over the course of next 3 years. But break it down for us in terms of the ICE vertical, the EV vertical, as well as the non-auto business. What are the various growth levers in each of them? What kind of growth trajectory do you expect, and what could be the split going forward in terms of the revenue contribution then?
See, over the time that we have been actually reducing our dependency on auto ICE, a couple of years back when we started this journey post our listing, it was only about 17% of our business was from non-automotive and XEV and tech agnostic. As we speak, last year we have exited with about 26% of our business coming from these sectors. We have set a medium, in a medium term, this would go up to about 40% of our business overall contribution to revenue. And, if you really look at our order book, almost more than 50% of our new order wins have been coming from non-automotive and tech agnostic and XEV segment. So this is a very strong indication that we have been growing, and that too on a much higher revenue base.
Right. Let's talk more about these segments then. One of the auto tech agnostic as well as XEV segments. How are the margins for these segments? Are they better or at par of what the company has reported at group level?
Tech agnostic, non-automotive and tech agnostic predominantly today are on our exports business, while some of the tech agnostic components have also started going into premium sector of vehicles. So this only means that this commands a higher percentage of margin compared to our normal domestic business. But having said that, since it's a new technology for us, because most of it is in lightweighting space in aluminium forged and machine category. So these tech agnostic set of components also require some more optimization in our production levels, while the design margins are bound to be higher than our normal company level margins, but it would take some more time for us to reach those optimized levels.
Mr. Preetham, before I let you go, last year there was of course a large deal where a couple of PE partners had sold some stake. Anything lined up in the coming year from CVC, IGP or Bean Limited?
I really can't answer on their behalf, but both of them combined together still hold around 11%. So I'm not the right person to answer on their behalf.
On that note, we'll let you go, but at least from the business point of view, you talked about how FY25 growth levels will be similar to FY24 and margins are also something that you're working to improve a little more. So that's the latest commentary coming in from the management. The stock holding up quite okay. But overall, the market has been holding up quite okay for now. Let's see whether we head to that 22,500 level or not. We have just been 20 points shy. And Naresh, it's been a very sticky range. I mean, if you look at the last 4 hours, we've been going towards that 22,500 and being shy of it just by 10 to 15 points.
So it's better than the volatility which we are seeing for the last 3-4 sessions, wherein we would see a 100-150 pointer cut in 10-15 minutes, a similar 150 pointer rise. So that tells you market is normalizing, getting into the elections. The volatility is getting digested and the trend is up. And if you look at the breadth, it's clearly up. You have mid-cap index at a new all-time high. You have mid-cap selected an all-time high. And small cap is also getting closer to an all-time high. So the breadth, the momentum is still strong.
All right, the market breadth, the momentum is still strong. And Kunal, yes, no doubt we are at least not seeing the volatility that we've been seeing over the past few trading sessions, which is a good sign at least for the markets. But what about the specific sectors that are actually participating? Auto definitely in forefront, all thanks to what's happening to Mahindra & Mahindra. But how is the sector looking to you?
So I think it's usually the same because I think other than auto stocks, you have the PSU names which have been doing pretty well. That's another sector which has started to show signs of breakout. So within auto stocks, it was limited to M&M initially. Now you have the likes of Maruti, TVS Motors. These stocks are making a comeback for themselves. Ashok Leyland is also looking attractive in that sector. So there are many new fresh names which have started to spring back into breakout mode and ending their corrective phases. So I think that's another comforting sign. PSU overall. PSU as a pocket has done exceptionally well, and the bounce which you've seen in the last 3-4 trading sessions for the indices, the magnitude of bounce for the PSU stocks has been much more higher. Railways again as a sector which has done pretty well for itself. So I think these are the usual sectors which have been doing pretty well, and that's where I believe one should probably try and focus.
Okay, point taken. So that's the view coming in on the top sectors right now. But time now to slip into a very short break. Don't go anywhere. When we come back, we'll track the last 30 minutes of the trading session. But it's not the last 30 minutes of the week because you do have to work tomorrow. There's a special trading session which is lined up. The timings, etc. will come up for you on the screen. I think the first session starts at 9, which is going to be the pre-open. And the actual will start at around 9:15. And the second session starts around 10. All those details will come up for you on the screen shortly.
Welcome back. You're watching Closing Trades on ET now, and definitely markets are holding on to those gains and trying to make a dash towards the 22,500 mark. But today is not just the last working, it is not the last trading day of the week, but there are a lot of other events also to focus on. One is that we are open for trade tomorrow. There is going to be trading from 9:15 to 10 a.m. and then from 11:30 a.m. to 12:30 p.m. But apart from that, there's another big event that's taking place is that just a day after Prime Minister Modi held a road show in Mumbai's Ghat Kopar, that's 2 days ago. Today, he will be addressing a Zahir Sabha at Mumbai's iconic Shivaji Park. You'll also have the Maharashtra Chief Minister Eknath Shinde and the Deputy Chief Minister Devendra Fadnavis amongst the others who are expected to attend. And on the other side, you have the INDAI Alliance, which will also be holding a rally at Mumbai's BKC to counter the Modi's rally in Shivaji Park. So let's head across to my colleague Anurag Shah, who's at the ground, who's covering the event. And Anurag, what's happening behind you right now?
So on 20th, Mumbai would be voting, and today there are 2 mega rallies happening in Mumbai. One is at Shivaji Park that would be addressed by Prime Minister Narendra Modi, which is a NDA rally, Mahayuti rally, and other rally will be happening at BKC. the Mahavikas Agadi Alliance rally. So right now we are at Shivaji Park. You can see the Shivaji Park, the flags of three parties, Shiv Sena, BJP and NCP flags, the huge cutouts of Prime Minister Narendra Modi, cutouts of Balasaheb Thackeray, and in evening in this Shivaji Park, iconic Shivaji Park, Prime Minister Narendra Modi would be addressing, and the 6 seats of Mumbai he would be focusing, for which people would be voting on 20th. So last time we have seen in 2019, all 6 seats were with NDA, but after that so many developments have happened, and now the Shiv Sena got split, NCP got split. So out of 6 seats, on 3 seats there is a Shiv Sena versus Shiv Sena UBT. On 2 seats it's a Congress versus BJP. On 1 seat it's BJP versus Shiv Sena UBT. So interesting contest this time happening, and people will be voting on coming Monday. Apart from that, the Prime Minister is likely to focus in his speech about the infrastructure, Mumbai's infrastructure upgrade which has happened in last few years, a coastal road, Atal Setu, a metro network and all, other reforms also, because Mumbai is the financial capital of the country. So about the last 5 years, he will also give the what all reforms his government has taken. He is likely to highlight on that also. So in today's rally, other than Prime Minister Narendra Modi, Chief Minister Eknath Shinde will attend, Deputy Chief Minister Ajit Pawar and Devendra Fadnavis will also attend the rally. First time ever, Raj Thackeray will also attend this rally of Mahayuti. So Raj Thackeray, you can see few flags of MNS also on the stage. The poster of Raj Thackeray, a picture of Raj Thackeray is also there. Ramdas Athavale is also alliance partner of Mahayuti, so he will also attend this rally. So this is the situation at Shivaji Park. You'll see right now the chairs are empty, but it's likely to get filled after 4 o'clock.
4 o'clock, we'll watch out for that. Thanks so much, Anurag, for doing that mood check for you. But 2 recommendations from my side. A, plan your travel, because
Absolutely.
it's perhaps going to be very, very chaotic in Mumbai because of the twin rallies which are happening in BKC as well as near the Shivaji Park. And secondly, get those symbols in your head, right? Because there has been so much to and fro about which symbol is which party, which coalition, etc. So get that sorted
So that's
ahead
the
of
weekend
Monday
holiday
itself.
for all of us.
I have done my homework already and
and
studied them. But for rest of you, maybe you would want to do that over the weekend. But whether the weekend will be good for the Bulls or the Bears, that's something which will be decided by the course of next 30 minutes. It looks like it's going to be a Bulls week completely, given the fact of a 1% rally that we have seen at the index in the week gone by. Important lines from Vodafone Idea flashing for you on the screen. So the stock is pretty much flat for now. What else is happening in the market in terms of the gainers? It continues to be MOIL actually, which is now up a solid 20%. A lot of these PSUs are actually doing well. Mazgaon Dockship up 14%, Bharat Dynamics firing away with that 12% gain, GRSC is doing quite well, BEML is up almost 8%. But within the PSUs, if I had to ask Sudeep, do you see any pocket which still provides value? Because everything, right, from an OMC to a defense, everything has shot up to a very, very elevated level now, Sudeep.
Well, you're absolutely right. The levels are a bit scary, but I think if you are in it for long term, there are still opportunities. I believe that the power sector still offers significant opportunity. With the electrification of the country being near complete and the power demand continuously increasing, the power-related companies in the PSU, particularly the top one, which is NTPC, has been my favorite for a very long time. It continues to remain so, and I think NTPC can be bought even at current level. Remember that beyond the traditional energy, NTPC now has a significant presence in the green energy segment as well, and at some stage probably that company will be, it will be demerged and separately listed. So I think we will see a lot of action as far as NTPC is concerned. Structurally also, it is best positioned to take the benefit of this incremental power demand with fantastic backward and forward linkages. If I have to pick up another company, probably I'll pick up coal. The demand for thermal power has shot up because the overall power demand has shot up, and Coal India's efficiency has also increased. While the auction realization and non-auction realization we can keep talking about, but the fact remains that overall demand is increasing, and Coal India is in a fantastic position to reap benefit of that reward. I don't want to comment what will happen to Coal India's performance after 20 years or 30 years, but as things stand today, I think it's a good stock to buy even at current levels.
All right, so positive on NTPC as well as Coal India. That is Sudeep's take coming in. But also let's talk about JSW Steel, because that one is slated to come out with its numbers. And my colleague Ashesha is here to tell us what exactly the street is penciling in when it comes to JSW Steel in particular. Ashesha, over to you.
Well, yes, we are expecting mixed set of numbers from JSW Steel this time. Volume growth is expected to be very strong. About 8 to 10% volume growth is what we are expecting on a sequential basis. But higher raw material costs and lower steel prices are expected to impact spreads of JSW Steel. Realizations are expected to decline about 2 to 4% on a sequential basis. And both coking coal and iron ore prices were on the higher side, because of which EBITDA per ton is expected to decline by as much as 25 to 30% on a sequential basis. We are expecting revenues at about 44,400 crores, which will be an increase of 6% on a sequential basis, and margins are expected to contract to 13% versus 17.1% that the company had reported in the previous quarter. Management commentary with respect to guidance for FY25 for volume, sales and production will be crucial. Apart from that, management commentary on capex and capex timeline going forward and debt reduction plans will also be keenly awaited. But all in all, muted set of numbers expected. Volumes are expected to be strong, but EBITDA per ton is expected to see a sharp drop on a sequential basis.
Okay, Ashesha, thanks so much for that. We'll watch out for that. But Trent is one stock which is perhaps in focus on account of the probability of getting included in the Nifty 50 as well. So the reports which has come from IFL and Nuvama suggest that Trent is one of the likely candidates. And other than that, LTI, Mindtree as well as Divi's are the candidates which might get out of the Nifty 50, while BEL is another candidate that might get in. Those are the flow picture which the street is expecting will happen come September. But Sudeep, a particular view on Trent, because the stock has been always expensive, but of late it's been delivering as well up to that level. If you haven't bought into the rally in Trent as yet, would you be a buyer here?
Careful. I think it's a fantastic company. The Zudio business has really, taken them to a different level altogether, and the growth has been fantastic. You are absolutely right. They have delivered consistently, but the valuation leaves very little, margin of error, and I think not much is left on the table. So to acquire it at 4,600 plus levels, I think I'll be careful. I don't think I will recommend. If somebody is interested in the space, it probably is worthwhile to look at Aditya Birla Fashions. I think, this has been a laggard for a very long time. Though they are in some kind of comparable business with Trent, they have been a laggard. But now the sharper focus is come back with, demerger of the brands happening. Focus definitely will be on the retail business of Pantaloon Retail, which they have, and other formats as well. So overall, I believe that's a stock which one needs to look at because of the valuation and because of the potential, which so far has not been realized.
You coming in on Trend, given the fact that at these levels, Sudeep wouldn't advise to go ahead and buy into the counter, but ABFRL could be a better alternative given the valuations are also comfortable. But Kunal, do you concur with this view? ABFRL over Trent? How are the charts looking for Trent actually? Because that one has seen a rise and only one-way rally, isn't it?
Yeah, so I think this year has been exceptional. In fact, start of this year, the stock was almost at, 3,000, 3,300 approximately. It's moved up to now 4,600, 4,700 plus marks. So I think it's been an exceptional move for Trent so far. But I think ABFRL is also something which is interesting, because the last month price action move for ABFRL, a bullish engulfing pattern for the stock, where it engulfed almost 12 months of price action. So I think that's a notable change which we've seen for ABFRL. The volumes being one of the best volumes the stock had seen last month over the last, I think, 12 or 15 months for the stock price. So that's a clear indication of a change of trend. And I think from here on, the risk reward, etc., is very much in favorable for ABFRL to see much more stronger upside.
Okay, ABFRL poised for a much stronger growth from here on. But let's take it across to Ansh now to get a list of the price volume buzzers. Ansh, tell us what's catching your attention.
Right, so Dixon Technology will be the first stock in focus as the stock has actually given a breakout from its downward sloping resistance trend line with volume of over 5 times its average trading volume of last 10 session. Also, the stock has touched record high level. Apart from this, Info Edge will be in focus as the stock has actually given a breakout from its symmetrical triangle chart pattern touching 1 month high with volume of over 6 times its average trading volume of last 6 sessions. Moving on to BEL, the stock is in focus as the stock has actually surpassed above its key pivot high of around the 240 level with volume of over 3 times and touching record high level as well. Lastly, FL will be in focus as the stock has actually given a breakout from its upward sloping channel surpassing above 100 and 200 DMA level with volume of over 14 times its average trading volume of last 10 session, indicating very strong participation in today's breakout. So keep an eye on these stocks.
All right, so that is all about the price volume breakouts in the stocks that are seeing good up move in trade today. But Naresh, there's one segment that we don't talk much about is the footwear segment. If you look at these counters, be it Bata, Relaxo, Liberty, they've not had that much of a good run, right? But when you talk about being a footwear company, you always think that the company or the businesses will continue to grow. But on the charts, what are the indications coming in for these counters?
So a lot of consumption related stocks have been in a downtrend or sideways, whether it is say a Symphony coolers or whether it is, we finally seen consumer appliances do well, but Bata and Metro, etc., they're all in a sideways consolidation. Bata looks interesting because the stock is available at the same prices where it was many months or years back. Also, the stock has corrected 30% from the top. So closer to 1300, 1350 looks like a basing out formation. So watching out for the sector, but Bata would be the interesting name out of this.
Okay, watching out for Bata. But in the meantime, it's been all about the election fever taking grip as far as the markets are concerned as well. June 4th, of course, is going to be the D-Day. But the BJP is fairly confident that they're going to come back with a thumping majority. And that's something which was reiterated today by the finance minister. She was, of course, speaking at the CII event. Let's listen into a slice of that conversation she was having with the media partners as to what their expectation and confidence level is.
I wish to take this opportunity to just lay the path before us, which would be something the industry can mull over, and sometime soon after the government is formed post-election. And let me say here, we are confident that Prime Minister Narendra Modi is coming back with a good majority. And therefore, soon after the government is formed, we look forward to a more pointed engagement with the CII to see what best can be done in the July budget, which will be the full year's budget, because what happened on 1st February, as you all know, was a vote on account. It just takes care of the expenditure for the first quarter till such a time the new budget is presented.
Okay, so that's the policy continuity that the finance minister is talking about. Of late, there have been a lot of questions asked on the taxation front as well. Let's see what they come out with when the full-fledged budget is released a couple of months out from us. What's the buy today, sell tomorrow idea? And this is genuinely sell tomorrow given it's Saturday working.
So looking at large caps only, first is the buy on Reliance Industries, giving a breakout of a last 4 or 5 days range, as well as made a base around 2800 level. So expecting a follow-up going forward, stop loss at 28.45. Target price of 29.20. Second is a buy on ACC. The stock has slowly recovered back from the support zones of 2400. Seeing good follow-up today. Stop loss at 24.90. Target price of 25.80.
Okay, interesting picks there. Kunal, what about you?
So I'll go with Chola Finance as the first stock which I would suggest as a buy. Triangular breakout and the stock looking attractive about 1280 to 90 mark. So it's just a buy with a target of 1350. Stop loss at 1260. And JSW Steel is the other name which has sprung back into a breakout mode about 900 mark. So 950 could be a target from a short-term play and stop loss at 880.
All right, so those are the BTST ideas coming in from both of our technical analysts. But on that note, we slip into a break on this edition of Closing Trades. When we come back, we count down to market close. Welcome back. You're watching Closing Trades on ET now, and we are still holding on to those levels. Looks like hopefully in the next 10 minutes or so, if we can make that dash towards 22,500 for the Nifty or so. But let's take a look at what M&M is doing at this point in time. That particular stock has seen a good comeback. In fact, yesterday it recovered from the lows after its earnings. And we are continuing to hold on to those good firm levels of about 6% or so when it comes to M&M. They surpassed that 2,500 mark as well. And Sudeep, what's your take coming in on M&M, especially the commentary when it comes to the farm business? Because the management is actually sounding very positive when it comes to their farm equipment business.
Well, I think these are the two segments. One is farm equipment, as you rightly said. The other is the tractor. These needs to pick up. I think every other segment is firing on all cylinders. We are expecting, with a good monsoon which is expected this year, tractors as well as farm equipment will also start showing good performance, and that will take probably M&M to further up from current levels. That's what I can say. The SUV are doing very well. The plan which they laid out, including the vehicles which are going to come up to 2030, I think is fantastic. The plan which was laid out by the management, the confidence is very clearly there as far as their SUV and the automobile business is concerned. Tractor is one segment where we need to see traction, and farm equipment is one other segment. With this, I think M&M will be in a position to outperform many other automobile stocks. If somebody is a long-term investor, I think they can still buy M&M at current levels.
Buy M&M at current levels, that's the verdict coming in. But the other space which has run up quite a bit is real estate, right? Today itself, Sobha Industries is doing quite well ahead of its earnings. And then you also have Brigade Enterprises, which is doing quite well. What about this segment, Sudeep? Which are the names you think which still have seam left on the upside?
I think realty is one which is a multi-year story. We have seen some amount of upward movement for all these stocks pretty much. But well-managed realty companies with clean balance sheet will continue to perform over the next 3 to 5 years with the kind of economic growth, the kind of the business development which we are seeing will definitely have positive effect, continue to have positive effect on real estate companies. The South Indian focused real estate businesses like a Shobha or a Brigade, the growth is growth engine apart from real. The residential is also commercial. The GCCs, Global Capability Centers, which are coming up, has been a big source of business for these companies. And I think that story is going to continue. As far as the other real estate companies which are well managed, let's say Godrej Properties or Oberoi Realty, even Macrotech, I think the coming few years are going to be excellent. We have seen a lot of excitement in the upper segment of the market, but the lower segment of the market hasn't seen much excitement. We believe that the interest rates should start coming down somewhere towards the end of this fiscal. As and when that happens, we will start seeing traction in the lower end of the market as well, because housing finance rates will start coming down. And that will add another engine to the growth of the real estate companies. So we are bullish generally. If I have to pick one stock, probably I will go and pick up Godrej Properties, Oberoi Realty. DLF also can be looked at because that's also a fantastic opportunity considering the valuation at which they are available.
So that's about the valuation game in the real estate picture. But Sudeep, what about the battery space? I mean, Exide had seen a stellar run after that tie-up which had come with Hyundai. And now we're just getting this exclusive voice, a rare voice at that. The MD of Amara Raja Group is saying that the focus is on the energy storage business. They have the plans to manufacture batteries to enhance storage capacity in the country. And their ask from the government is not to create roadblocks. And they mean it in the sense that some of the equipment that they need for the manufacturing actually comes from China itself. So they're asking the government not to levy those duties and make sure that the transition happens so that there's enough capacity back home itself that they can develop all of these products. They've announced a gigafactory for manufacturing of lithium-ion battery as well, and they're expecting the manufacturing to begin in 2026. Sudeep, within this space, Amara Raja versus Exide, which is the one that you would pick?
Well, Exide is a couple of steps ahead with the tie-ups and all which they have announced. But I believe Amara Raja will also pick up. I think the opportunity, Anisha, is huge. The entire game for automobile changes from an engine to a battery in the EV world. For a EV, I think the most important thing is the battery. And the battery manufacturers will definitely play a disproportionately higher role in the EV ecosystem. Under these circumstances, our both established battery manufacturers, Exide as well as Amara Raja, will have a large scope and large opportunity. And not only they will have for domestic market, but at some stage they can look at nearby markets also for exports. So both Amara Raja and Exide does look good. Amara Raja also is getting its act together, and I'm sure they will also do well in the near future. As things stand today, Exide has already moved up quite a bit. So if I have to pick up one stock out of the two, probably I will go and pick up Amara Raja, not because it's a better company, but because I have a valuation comfort on Amara Raja at this stage.
On Amara Raja versus Exide Industries, and like we told you that we have the exclusive tic-tac coming in from Amara Raja MD to ET now. In a short while we'll hear out what exactly he had to say to my colleague Prakash in the exclusive interview, but just to highlight some of it, he's saying that the focus is on energy storage business, but in fact let's hear out the man himself.
Transformation as far as energy sector is concerned, especially energy transition, a lot of initiatives that the government has taken. Can you give us some sense about your future strategy going forward?
We're very much part of the energy transition that's taking place in a number of different ways.
Right.
First and foremost is in the energy storage side.
Right.
We are manufacturing batteries right now, lead acid, and in going forward, lithium-ion cells also will be making. So from energy storage side, it's very important to have about 10 to 20% of the generating capacity in renewables should have storage capability. Today, that's not the case. Even though government policy is in place, on the ground it's not being installed. So there are several ways to create that storage. At a grid level, you can do, the piped hydro. But that is only for grid level solutions, and you can't do it everywhere. There's a limitation based on geography and so many other things where you cannot do that. So you cannot have a full-fledged integrated storage system without battery. So that's something that we are looking at developing and promoting more.
Already have a PLI scheme in this regard, but do you see that the government should come forward in a way of launching yet another PLI scheme in terms of manufacturing a storage system or developing here in the country?
The first PLI was, I think, it wasn't fully subscribed because there were some issues with some of the firms not being qualified. So the round 2 has been floated now. Let's wait and see the results of that before we can comment on future rounds.
In terms of import, because we are still largely dependent on imports when it comes to power equipments, and the China being our neighboring country, and we have some other issues as well with the China. So in that context, what would be your recommendation to the government to incentivize industry in the context of having proper capacity here?
Yeah, so what we need support from the government is to help us to become independent. For that we need they need to facilitate us and not create roadblocks or import duties on manufacturing equipment. Because today Chinese manufacturing equipment is being used all over the world, wherever lithium-ion cells are being made, whether it's in North America or in Europe or in even Japan and Korea. The manufacturing equipment is coming from China. So we cannot escape that. We shouldn't be restricted in terms of importing equipment, nor should we be restricted in getting the right people to come and install and commission it. Now, when I asked the question, the response was that you don't need Chinese technicians to come and turn a screwdriver. But I think it's a little more complicated than that. You can't oversimplify. Because if in the lithium-ion cell making, tuning the machine is very important. And while you're tuning it, there's a lot of raw material that gets used and wasted. Before you know it, if it takes time to tune it, you'll be losing billions of dollars in raw material by the time you tune it properly. So time is of the essence. Having qualified people who know what they're doing to get the machine running efficiently as quickly as possible is very important in order to not burn so much money.
Okay, well, last question on a gigafactory for the manufacturing of lithium-ion batteries. Some companies have already announced their plan. If you are also planning in this regard.
Yeah, we have also announced our plans. We've acquired the land in Telangana. We've started construction of our pack assembly unit, and soon after completing that, we'll be starting our first gigafactory construction as well. We expect in next 18 to 24 months we should be manufacturing cells from that location, and we're in the race.
So surely a very exclusive and interesting chat that my colleague Prakash managed to have with the Amara Raja Group MD.
If you like this video, then like, share and subscribe to ET Now.